Hey guys, Dave Keller here with Market Misbehavior. Semiconductors are a key group to follow. I tend to think of them as a bellwether group. When the semiconductor space is doing well, markets as a whole are doing pretty well. Also, for the most part, here's the challenge going into September 2022. Some semiconductors, which had been doing okay, now starting to look weaker. We'll look primarily at NVDA and talk about what that chart means for the broader investment world. So I often follow semiconductors because I feel that they're a great sort of a backbone of the modern economy, right? When semiconductors are doing well, when conditions are good, and they're sort of thriving for whatever reason, usually isn't a bad sign for stocks. And when they're struggling, again, regardless of what the reasoning is, it doesn't tend to be good for the overall market environment. A lot of people like to think, this week, for example, with NVIDIA and AMD, there's news from China and how it's going to impact their businesses. Again, the whole part of technical analysis, I think, is really important, is that the why really doesn't matter. You don't have to worry about why the price is evolving in a certain way or what is causing these price behaviors to emerge, although that is certainly, I think, an important way of understanding why the markets are evolving the way they are. But in terms of the actionable trading signals, the technical analysis toolkit tells you, price tells you all you need to know. Price tells you when supply is outweighing demand, or the opposite, when fear is stronger than greed, when selling pressure outweighs buying power, or the opposite. All of that should be reflected in price. That's what the technical analysis masters that came before you and I taught us, and I think that's absolutely the case. So today we're going to look at the chart of NVIDIA and talk about what that means for the broader semiconductor space, and particularly talk about measured moves and why it's an important concept to think about with this chart. If this sort of thinking about technical analysis, market history, market behavior is of interest to you, please subscribe to my channel. Also, give the video a thumbs up if you like it. We'd very much like that back. Also, put a comment below. Do you agree with this take on NVIDIA? Why or why not? Let me know in the comments below. Let's get to the chart. All right, so here we're looking at the chart of NVIDIA. We're going back for about 2 years, and I really want to focus on the right half of this chart, but I think it's helpful to remember where NVIDIA has come from. So even though, if you look at the last 6 months, sort of going down and to the right, but bringing in a little more data, you remember where stocks like this came from, right? Back in 2020, 2021, coming off the March 2020 lows, look how the stock accelerated to the upside in 2021, peaking in November. And that's noteworthy, right? Because remember, the broader S&P, the broader indexes, and particularly the S&P 500 peaked out in January, actually made a higher high in January. That was one of the great tells, I think, in modern investment history, in modern technical analysis history, where certain things made new highs in January 2022. But a lot of things like NVIDIA and others were actually making new swing lows or had already undercut key moving averages as the S&P is making a new high. Great illustration of technology not participating in that last leg higher. Let's talk about what's happened so far, starting in November of 21 to where we're at now. We had this big move down to the 200-day moving average for NVIDIA, chopped around for a little bit, made a new swing high in March. That's when the S&P attempted to get above 4,600, stalled out there, rolled over. NVIDIA did the same, made a new low into May. Then really has spent a couple months chopping around, and you can see I have a blue horizontal line right around 190, and then a pink horizontal line currently, not too far from where we're at right now, right around 140. So let's talk about this area. This is what I call a consolidation area. A lot of people would call this a like a rectangle pattern, kind of a similar. I'd sort of think of it as a consolidation zone or something like that, right? Some sort of, you have a downtrend, or a clear downtrend, March, April, May. Then we go sideways for the last 3 months, right? In the last 3 months, while it's been choppy and while there have certainly been price swings, what has the overall direction been in NVIDIA? And the answer is that painful third direction, sideways. Neither bulls nor bears are happy with this environment because no one's winning, right? Everyone's just sort of sitting on their hands and waiting for something to happen. So we settled into this range with 190 on the upper end, 140 on the lower end. And that's why when we reached up to 190 here in early August, this is one of the charts we've been talking about a lot elsewhere, because the fact that a name like NVIDIA can't get above its June highs, I think is meaningful. NVIDIA is one of those 8 stocks, what I call the phenomena stocks: Microsoft, Amazon, NVIDIA, Netflix, Apple, all those sort of 8 stocks with those tickers that are really the sort of FANG and a couple of FANG-like or FANG-y type of stocks. So the fact that one of these names, particularly in the semiconductor space, which, as I mentioned, tends to be kind of a bellwether group, Stalling out at 190 is a big warning sign for the markets as the S&P was testing its 200-day moving average. Now we've retraced 100% to the bottom back again of this congestion area, and we're testing 140. We gapped lower on the news on Thursday of this week, did not close below 140, but as we're going here on Friday afternoon, the September 2nd, we're actually currently trading below that level of support. So what does it mean to have a measured move? Well, let's look at a little earlier measured move, and I'll show you what I mean. What a measured move means, in my opinion, is this, right? Let's get a line here. I'll make some solid lines that are really easy to see. You had this big move lower here. Then you sort of have this consolidation. I'm kind of loosely illustrating this earlier, what I'd call a congestion area, right? A downtrend, a clear downtrend, and then a consolidation zone, right? Consider this a failed breakout above 270. We come back in the area. We've tested this level of support around 210 a number of times. Finally, we break down through the lower end. So how do we figure out what might be next for a stock like NVIDIA? Well, common technique, and we'll change a different color here. Let's make these, I don't know, pink, purple, whatever this is. So we take the, and that we're actually already using that color, red. Here we go. We take the high here, and we go down to the beginning of that pattern. So what was the entry point? Then take that same line and subtract it from the lows. So now that we've broken down through the lower end, what happens there? You can see we get right to 160, which is pretty much where the stock bottomed out here in May. And then now we've been chopping around this area, right? So that's an idea of the trend going into a consolidation pattern often mirrors the trend coming out of the pattern. I'm giving the very basic, what I'd consider the measured move strategy. If you are familiar with Dow theory or Elliott wave or Gann analysis, a lot of those more geometric kind of analytical platforms, pattern-based patterns, approaches often have this kind of thing like an ABC pattern, ABCD or something you'd call it, which is, the initial leg and the final leg often have some symmetry to them. And there's different, rules and mechanics that they use, but at the end of the day, I think it often goes back to that basic measured move strategy. So now where are we at? Well, we've had this, this consolidation pattern, a new, what you'd call a new congestion area. So now what's next? So now let's take a look at, so I would say this is probably the pattern I would use. This is sort of that, sort of drop from the March high down to the low there, and let's say make that guy orange, and we take this same line and then project it from the lows. So that's obviously taken us well below the visible area, but we'll call that down to around $90 a share, to be honest with you. It's just if this scale would continue lower. So what this basically says, just to summarize, is the trend leading into a consolidation pattern often mirrors the trend coming out of the consolidation pattern. That's why a level of support is so important to follow. And what I would say that means is, just like we had a measured move, November to January that mirrored very closely April through June. If we would break below 140, have a valid breakdown, which I think Friday into Monday could certainly confirm, the measured move, taking just that initial run into there, would basically give us a downside target around $90 to $100 a share for NVIDIA. That's it's quite a drop from where we're at right now, and it shows you the potential downside in these names. So while we've talked about the weakness that we've seen going into this, through the course of this week here, going into September. The challenge now is we're in the seasonally weakest part of the year. September actually tends to be one of the worst months for the markets as a whole, but particularly for the technology sector, which tends to underperform and actually tends to be down in the month of September. That, combined with the fact that a chart like NVIDIA is maybe failing to hold support, tells me to think about that measured move for a potential downside target. The real question you should ask yourself looking at a chart like NVIDIA like this: what is your downside protection? If you own a name like this, what's your exit strategy, right? At what point do you get out of that stock and find greener pastures if you get followed through to the downside? This is a really good time, even though stocks are down a bit from mid-August, depending on what you're looking at. It is never too late to have a clearly defined exit strategy, set that up ahead of time, and then make sure you follow it if we see further weakness in the coming weeks. So there we go. That's the chart of NVIDIA, the measured move strategy. And again, the basic concept is you look at the trend leading into a consolidation pattern, look for a similar move coming out of it. We saw how that worked very well with NVIDIA in the first half of 2022. If we get a similar sort of symmetrical reaction of a breakdown, given a valid breakdown through 140, which we may be getting here today going into early next week, that would suggest quite a further downside potential for a chart like NVIDIA. What does that mean about the overall market environment? The stock like NVIDIA is going down another 30, 40, 50 points. That's what I would be thinking about going through into the month of September. Just to think about, again, while it may not be a likely scenario in your mind, it is a possible scenario. And I have learned over time, don't just think about what you think will probably happen. Think actively about alternate scenarios. Think about what would happen if NVIDIA rips to the upside and breaks above 190. At what point would you feel compelled to get back in if you're out or if you're short at the moment? Thinking about those potential outcomes helps stretch your thinking out of a predetermined narrative, opens yourself up to evidence that might come tomorrow and in the weeks to come. So make sure you think outside the box. Think probabilistically, not tied to a particular narrative, and think about how measured moves can impact a chart like NVIDIA. That's it for now. Put a comment below. What do you think? Do you agree with that downside assessment of NVIDIA? Why or why not? What's your target if we would break below 140? Let me know in the comments. And also, don't forget to subscribe and give me a thumbs up because I'd very much appreciate it. Have a great long weekend. We'll see you again soon.